The S&P 500.
The Dow, the Nasdaq, and the S&P 500.
Take a look at your S&P 500.
You hear it on the news every day. The S&P 500, along with the Dow 30 and Nasdaq, the S&P 500 is a commonly used benchmark for determining the state of the stock market and the American economy. Unlike the Dow 30, which consists of 30 different companies, the S&P 500 tracks 500 large cap companies, which are companies with a market value of $10 billion or more. And so, many view it as providing a more clear view of the American economy. And these basket of 500 companies are updated every 3 months based on factors like liquidity and financial viability. And everyone tries to beat the S&P 500, including Warren Buffett, but only a few succeed. It's reported that over 95% of professional investors can't outperform the market. And comparing the past 10 years with Warren Buffett's Berkshire Hathaway, the total return of Berkshire was 242%, which is fantastic, but the S&P 500 came a bit higher at 257%. And that may be why the Oracle of Omaha is investing in the S&P 500 himself. Berkshire holds both the Vanguard S&P 500 and the SPDR S&P 500 ETF Trust. Now that you have the numbers, there is an easy way to invest in the 500 companies that are in the S&P 500 by putting your money in a single investment, and that is through the use of an ETF, or exchange traded fund. There are two ETFs I want to share with you today, and they are the Vanguard 500 Index Fund, trading under ticker symbol VOO, and the SPDR S&P 500 Trust ETF, trading under ticker symbol SPY. So for those of you unfamiliar with an ETF is essentially a basket of securities or investments that invest in an underlying index. In this case, the SPY and the VOO invests in the 500 large cap companies in the S&P 500. The great thing about ETFs are that they have a significantly lower fee than mutual funds and that they trade on the market, so you can sell or buy just like regular stocks. The great thing about ETFs are that they have a significantly lower fee than mutual funds and that they trade on the market, so you can sell or buy just like regular stocks. And I'll quickly go over how to invest in these two ETFs using M1 Finance. And if you guys haven't seen my video on why I use M1, I recommend you guys go check it out. So first you want to log in to M1, and once you're there, click on the Research tab. And in the Search tab, type VOO, and the ETF will show up with some basic information like the expense ratio and the dividend yield. Another great thing to point out about ETFs is that they have a very low expense ratio. An expense ratio is how much of the fund's assets will be used to cover basic expenses, so the lower the better. The Vanguard S&P has an expense ratio of 0.03%, but if you look at a typical mutual fund, like the Vanguard Dividend Growth Mutual Fund, it has an expense ratio of almost 10 times that. Now, if the thought of investing your money in 500 companies that you don't really know about scares you, then you can also think about investing your money in the 30 companies in the Dow Jones Industrial Average. There is an ETF for this as well, and it trades under ticker symbol DIA. So if you want to invest in this, simply click Add to Portfolio and write down the percentage of your money that you want to allocate to this ETF. As always, thank you guys so much for watching, and don't forget to hit the like button and subscribe.